First, it adds value by allowing the business owners or operators to know how well the business is operating. You need to be able to see your revenue day to day, month to month, week to week. And then every month you need to do what's called financial reporting. Welcome to Osage Financial. If you're a student, we hope you find the information in this episode valuable to you. If you're a company looking for accountants, click the link below and we'll be in touch with you as soon as possible. Today's episode is one of my favorite episodes that we do every month. We've done one since January, and this episode is a basic Q&A episode. So we have 3 questions from the audience that we'll be answering today. So I'll be reading the questions and then answering them as best as possible. So we'll just go ahead and get started. The first question that we have here is, how do you stay motivated? Whoa. I think motivation is probably the biggest thing for anyone and everyone. If you're in school, you want to be motivated to get good grades, to graduate on time. If you're a company, you want to be motivated to do the best job for your clients, sell the most jobs, and to succeed. We all have some kind of thing that we want to be motivated about. For us, I really stay motivated by making sure that I'm very consistent in the work that we do. We've had 22 episodes in this podcast. We started this podcast at the beginning of the year, and every week we've been consistently producing an episode a week. So we've been consistent there. I'm motivated because I would like to reach that goal of making an episode a week for the entire year of 2026. Business-wise, we created a budget at the end of 2025, and that budget stated what's our revenue target, what's the target for our cost of goods, and what's the target for operating expenses, and then what is our targeted net income. Okay, so we're motivated to make sure that we're reaching that goal. We track that goal every month, so we stay consistent, and consistency really gives us motivation. You know, sometimes when you listen to a song and the song is so good, you just get that good feeling. The vibes are good, the vibes are up. That's fleeting. That goes away pretty quickly. But when you're staying consistent, or when you have a target, you're motivated because that target doesn't really go away easily. That target stays in your head. The energy that you may put towards the target changes up and down, right? You might be listening to the song and then the energy is high because you're feeling good. Or maybe something else is going on in your life. The energy is a little bit low, but you have a target that you're working towards. So as long as you're consistent, that consistency will motivate you to reach your goals. So it's a really good question. But consistency really allows us to stay motivated. The second question that we have here is, what is the process of onboarding a client? So we have 3 different business units that we have. We have the accounting business units. We have the tax business unit, where we do taxes for individuals, families, businesses, nonprofits. And then we have the advisory business unit. We've added a 4th one, which is marketing, so we can help other business market their business as well. But the 3 primary business units that we have, it just depends on what kind of client we have. So our main business unit is the accounting business unit. In the accounting business unit, we onboard a client by first understanding what are the client needs. Every business has different needs, and every business is at a different point of growth in their business cycle. So once we understand what are those needs, we create a SOP, which is a standard operating procedure for that specific client. Our SOPs are client specific, not business specific, or not revenue line specific. Our SOPs are really client specific. So once we understand the client's needs, we create a specific SOP for that client, and then we break down based on the client's needs, how are we going to onboard this client? Some clients, it's just plug and go. We just plug into whatever system they have. Some clients, we have to really create a process for that client, from creating a QuickBooks account, SAP account, or any other accounting software, getting them some payroll softwares. It just depends on the client. So our process of onboarding a client is client specific. And we recommend that any company takes this approach, where it's a client specific approach, because the clients are different. And it just depends also what kind of industry you're in. If you are just in an industry that does the same thing over and over again, let's say you're a plumbing company, you should have a standardized SOP. When you onboard a client, what's your name, what's your address, what's your email, what's your phone number, right? You get that data, and then provide the service or whatever the service the client needs, or provide the maintenance if the client is needing maintenance. So some industries must be just standard specific onboarding for clients. Some industries can vary. And for us, we decided that it's a variable onboarding process. and we create a specific SOP that's client specific, especially for our accounting business, for the accounting that we provide to companies. If it's the tax side of the business, and the tax side of the business is more individual driven. We have some companies that we do taxes for, but it's more individually driven. When we onboard those type of clients, it's going to be the same thing: name, phone number, email, address, and then we ask them if they're single, married, filing jointly, head of household, how are they filing their tax status. So that one is more standardized just because it's the same thing over and over again. The companies, they have a lot of things going on, so we create SOPs for those clients, and it's client specific. The tax business is standardized, the same thing for everyone. And then for our advisory business, it's also kind of like the tax business and the accounting business is a little bit of in between. For the advisory business, because these people are running businesses, we take their information and then the business information, and then we kind of sit back and listen to understand what it is that they need. And then for them, we create an SOP, but the onboarding is the same as if they were just an individual. However, the onboarding on the company side is as if they were a company. And then we mix both of those and then create a specific SOP for that client. Marketing, the fourth business unit that we've just added. Marketing is just understanding what does a client do and what are they wanting to do. So the client that we have that's in the fitness industry is more specific to what it is that they're wanting to do, and then we understand what they want to do, and then we create a specific marketing program for them to be able to reach their goals. So it just depends. But for us, it's very specific. What business line do we have? And then in those specific business lines, we onboard a client specifically. For our accounting business, we create specific SOPs for each individual client. For our tax business, we have standardized SOPs. For our advisory business, it's a little bit of a mix of the accounting and the tax business. And then for the marketing side, we just decide what is the best thing that the client is wanting to do, and then we create a service and a SOP around that client, and then we'll get them onboarded to the services that we have for them. So great question there. Then our third and final question: how does accounting add value to a business or a nonprofit? So we'll break that question down into two parts. How does accounting add value to a business? And then how does accounting add value to a nonprofit? For a business, it's very direct for us. Accounting is the language of business. The understanding of accounting provides fluency, and once you're fluent in something, you're more likely to succeed. So for us, knowing that accounting is the language of business, we take the accounting processes that we have and we'll plug them into whatever business we're dealing with. And the question is, how does that add value? First, it adds value by allowing the business owners or operators to know how well the business is operating. You need to be able to see your revenue day to day, month to month, week to week. And then every month you need to do what's called financial reporting. Financial reporting allows you to take a look at the previous month. How was the revenue for the previous month? What were the cost of goods? What's the gross profit? Is the company making profitable margins? And then below that, what are the expenses of the company and what's the net income? This information is important for managing the business day to day, week to week, month to month. It's also important at the end of the year when the financials are done every week and every month is financial reporting. Your balance sheet is tied out, your profit and loss is put together. When the tax people or when you have to take your accounting to a CPA, all that information is already put together, and the CPA can be able to easily, quickly, and appropriately and accurately create a tax return for yourself and for your business. So accounting adds value by first helping the business owners and the operators understand exactly what are the financial, what's the numerical impact of the day-to-day activities in their business. Are they making a profit from the decisions they're making? If they're not making a profit, what adjustments can they make to make a profit? An adjustment that could be made, for example, is if your revenue is good, you have $1 million in revenue. However, your labor is 35% of your revenue. You need to be able to see, is this labor rate sustainable? Maybe you want to limit your labor to 20% of net revenue. So by allowing the business owners and operators to see the day-to-day, week-to-week, and month-to-month financial reporting, they can make business decisions in near real time to make adjustments to improve the net income at the end of the month, at the end of the year. And then, of course, when the year is closed, their fiscal year is closed, they can take the financial statements that we've created throughout the year, take them to the CPA, or we can do their tax returns for them. And then that will be quick, easy, efficient, and accurate tax reporting for them. So it's very, very important. On the other side, how does accounting add value to a nonprofit? nonprofits does not mean that they don't generate revenue. Nonprofits just means that the owners do not take a profit, or the founders of the nonprofit do not take a profit. Nonprofits must in absolute generate revenue. All right. I've seen nonprofits bring in $100 and then spend $200. Where's the other $100 coming from? It's coming from the founders of the nonprofit, right? They're taking money out of their own pocket to be able to continue on with their mission, which is wise, which is humble, which is great. What we advise nonprofits is to first look at themselves as a revenue generating institution, right? I wouldn't say business necessarily, I would say institution and then nonprofit. They must look at revenue first and then see what the key revenue drivers are. As a nonprofit, a revenue driver would be the donations that the nonprofit receives. If they have a website, they should have a donate button on the website. If they create social media content, the social media content should always have a point of donation where the people that are watching this content can click a button and donate to that nonprofit. This generates revenue coming into the nonprofit. A nonprofit profit and loss would be called a statement of activity. Profit and loss is business activity, revenue, expenses, cost of goods, net income. A statement of activity in a nonprofit would be the same thing. The revenue that's coming in from donations, grants, etc., and then the expenses of the nonprofit. The major expenses of the nonprofit would be the labor in that nonprofit. If there's no labor and it's all volunteer work, that's great. There's no major labor expenses. The next biggest expense would be, what is the mission of the nonprofit? If the nonprofit is to feed and clothe the homeless, then the majority, almost 99% of those expenses will go to feeding and clothing the homeless. If you operate a nonprofit, it's very important that you stick to the mission that you're in. If the mission of your nonprofit is to feed and clothe the homeless, you should not be doing other things that are not related to that nonprofit. You may lose your 501c3 status. It may become a little bit complicated for you. But if you're a nonprofit and you stick to your mission, you'll be great. So how do we add value? We add value to the nonprofit by letting them understand the key revenue drivers. Where is that revenue coming from? Grants, donations, etc. The expenses, if they have labor, we make sure that they manage their labor appropriately so that they can continue on with their mission and they can stick to the mission that they're in. So we provide a monthly statement of activity, which is like a profit and loss in the business. And then we provide what's called a statement of financial position, which is like a balance sheet in a business. So we help nonprofits with those. So the question is, how does accounting add value to a business or nonprofit? We add value to a business or nonprofit by helping the owners and operators understand the day-to-day, week-to-week, month-to-month activities in their business, profit and loss, balance sheet reporting, key performance indicators, and where the business can make adjustments to improve their net income, or where nonprofits can make adjustments to improve their statement of financial position or to improve the activities in their nonprofit so that they can add value in the goals that they have in their mission statement. I think that's pretty much what we have for today. It was a great episode. Thank you for tuning in. If you're a student, we hope you found this information valuable to you. If you're a company, click the link below and we'll be in touch with you as soon as possible.